Good evening, folks. This is your ticker guy, Carl, coming at you from Niceville on the 24th. This is my second video for the evening, this one addressing President Bush's speech. The President made quite a little fear presentation this evening about how we must do what he has asked for, and he took ownership of Henry Paulson's proposal. Very nice little Freddy Krueger, Edward Scissorhands kind of shock tactic. But I think that we should look at the facts. The President stated that credit was drying up. This is true. He also said that the root cause of this, when you really got down to it, was a bunch of cheap money coming in from Asia and other countries, mortgage securitization, and low interest rates. The President must think we all have very short memories. You see, I do remember the address in which President Bush gave after 9/11, in which he exhorted everybody in America to go shop. I remember Alan Greenspan flooding the system with liquidity, taking interest rates down to historic lows, all in an attempt to avert the consequences of a deep recession, which we were due for after the technology bubble had burst. A bubble that, by the way, was fed by cheap credit. I know. I ran a company during those years, and I saw the excesses in that line of business during the time that I did so. I was one of the few prudent ones, which is why, when the dot-com explosion came, if I had not sold the business, we would have survived. Most of the other people in that line of work did not. I also remember Alan Greenspan telling everybody that they should take option arms or other forms of adjustable rate mortgages. Oh, he'll say, I didn't really say that, but that certainly was the impression he left people with in the years after 9/11. I also remember that President Bush did a number of other things during his 2 terms in office which had a material impact on this credit bubble. One of the most important was that he actually took state regulators to court to preempt their regulations against predatory subprime lending. He won those lawsuits on the basis that these banks were federally chartered and therefore state regulators could not impose their own standards. The state of New York in particular tried to put a cork in this problem back in as early as 2003 and 2004, and they were sued. President Bush's SEC also preempted standard regulatory rules that had been in place for many years to keep a 12-to-1 leverage limit on broker-dealers. Fannie and Freddie were operated under the guidance of OFEO. They went through a major accounting scandal in 2003 and 2004. OFEO was an agency that was running under the executive, that would be President Bush's control once again. All 5 of the institutions, Bear Stearns, Fannie Mae, Freddie Mac, the Lehman Brothers, and AIG, all died due to excessive leverage. During the time that President Bush has been in office, he has enforced exactly no regulations against excessive leverage in any securities or business-related industry. Fannie Mae and Freddie Mac were running leverage ratios of approximately 80-to-1 when they collapsed. Bear Stearns was running a leverage ratio of over 30-to-1. AIG had $500 billion worth of credit default swaps on its books against a few $1 billion in free capital. Yes, they had a $1 trillion balance sheet, but the rest was committed to other things. So, it would seem to me, uninformed that I may be, and without a PhD after my name, that President Bush actually set in place the conditions for this credit bubble. Now he wants to spend $700 billion of your money to bail out his screw-up. I think that's a problem. College costs have risen at 3 times the rate of inflation in recent years. Homes more than doubled across America. In places like California, they more than tripled. Which would you prefer, folks? If you want to buy a house, would you prefer that house to cost $200,000 or $400,000 for the same house? When your child goes off to college, would you like that college to cost $5,000 a year or $20,000 a year? Would you like it if you were somehow able to get out of the underwater loan that you may be in on your home now? Did you hear anything in the speech this evening or anything in this plan that will address any of these problems? No. Will we fix any of the problems that have been at the root of this crisis? Lack of transparency, excessive leverage, off-balance sheet vehicles, over-the-counter derivatives where people are literally lying about their ability to pay? Does this proposal address even one of those critical problems facing this nation? No, it does not. So, exactly what are we going to get for our $700 billion? No matter how they slice it and dice it. Is this really at the core about Main Street? Are you going to be able to get a better home loan, a better car loan, a better business loan, a better student loan if this bill passes? Are we really going to solve the confidence problems which are why the market is locked up? Or are we simply going to take $700 billion of somebody's bad bets and make you pay for them? I believe that the answer is that this bill does the latter and none of the former. It is a bad deal for that reason, ladies and gentlemen. The President not only failed to convince me that this was a good bill, he in fact convinced me even further that it's a bad one. The idea that every bank in America is suddenly going to be in trouble if this passes, if this does not pass, I'm sorry, is just plain false. Thousands of smaller banks and even some larger ones, along with credit unions across this country, didn't make unsound loans. They made good quality loans to good quality people. 80% of the citizens of this country got absolutely nothing out of this credit bubble. You are probably one of them. All of these bankers are the ones that understand high finance. They understood that you couldn't afford the payments. They understood that home prices would never go up. Yeah, some of you had stars in your eyes, I understand. But you're not the experts. These people are. Were you warned? Were you told? Were you herded into the closing room and had the papers put in front of you, all neat and tidy? Maybe your income was even changed by your mortgage broker without your knowledge. Yeah, okay, it's your responsibility to go through the paperwork and notice it. Some of you did, some of you did not. But you're not the experts. Now you're being asked to pay the bill. I did not hear the President apologize for any of the failed policies that he put into place that caused this mess. Not for the OTS, the OCC, the preemption by the SEC of leverage limits, Fannie and Freddie being allowed to gear up at over 80 to 1. College costs going up at 3 times the rate of inflation. None of these things were apologized for tonight. You were just asked to take on $700 billion worth of debt to cover somebody else's bad bet. There is a better way, ladies and gentlemen. It has been presented in my other videos, and soon we will have even more for you. Call Congress. Tell them not only just no, but hell no. Do it today.